Peter Eliades with you with Stock Market Cycles Update for Thursday, November 7th. A lot to talk about today. Let's start out by giving you a few notices. First of all, we, as a general note, when we stopped writing our newsletter several years ago, continued to write a report, usually on a monthly basis online, charge customers for it, $19.95, and we have continued to do that over the past several years. We're going to do that over the next few days, and for that reason, we're going to take a few days off from the update. We probably won't be doing one tomorrow, Friday, and we probably won't be doing one on Monday of next week. So Friday and Monday, there will be no daily updates here on the YouTube channel. My best guess is that they will start again on Tuesday of next week. I would ask you, if you think that we've been of any value to you over the past couple of months, to go to our website, StockMarketCycles.com, and get our report. Usually there's some great charts in there, some very pithy comments on the stock market, and actually this time around, there's a great chart that I'm going to show that, in fairness to paying subscribers, or shouldn't say subscribers because we don't have those anymore, but in fairness to the paying clients who go online and buy the report, and again, it's only $19.95, there's going to be a great chart in there that hopefully will give us a really good idea as to when a final top might come in this great bull market. It's a cyclic pattern, a time pattern that has endured for the past 100 years in the stock market. We're going to be showing that in our report, hopefully going out this weekend, maybe Sunday by the latest. So I encourage you, if you want to support us and support what we've done on this channel for you for absolutely no cost at all, to go to StockMarketCycles.com and get that report. Again, it should be on, I would guess, by Sunday night, Monday morning at the latest. So there will be no updates on Friday, which we typically do a weekend update, and there will be no update on Monday. Another reason for that is that we told you about our new grandson, number one grandson, first time in my life. We're going to Arizona to meet our little grandson, Maximos Alexander Eliades. Pretty excited about that. So we'll be gone over the weekend and come back by Monday night, Tuesday, and we'll be putting an update on Tuesday. Okay, let me encourage you, please. The more people that subscribe and the more people that watch this channel, the more encouraged I am, because I see other technical channels that are getting 2,000, 3,000, 4,000 people a day, and we're lucky if we get 200, 300, 400 people a day. You show me someone who's called the market better than these incredible cycle projections. I don't think it's been done. Okay, enough bragging. Let's get into the market, and this could be a really important day, or just a pretty important day, or a minor important day. But I think today was potentially an important day, and we're going to tell you why. Let's go through just a couple of projections first, and then we're going to go over a technical chart and show you what we think is going on. So this is the New York Composite Index. Remember, we showed you this over the last day or two and said, you know what? I mean, I know it's asking a lot to come right into the window because we were so very close to it over the past 2 or 3 days, but cycles projections usually do that for whatever strange reason you want to concoct as to why they do it. They do it. These cycle projections are uncanny. They're not 100% accurate. Nothing is. But when you see this happen, remember, this projection was given back here. It was given in this time period here, in the middle of October, with, yes, this is the New York Composite Index, around the 13,000 level, 13,050 or whatever. And now we're at 13,004, closed at 13,395.55 today. But what did we do? We closed inside the projection window on the closing basis chart. Let's bring up the Dow, because that was the other one that hadn't quite gotten into the projection window. Do you think it did it? Look at this. I mean, you have to love this. Come on. Come on, don't you love this? Please give us a remark below and say, Peter, I love this. This is unbelievable. I've never seen anything like it, because that's the way I felt when I first started working with this. And I want you to get that same excitement. So look at this on the Dow. The minimum upside closing price projection for the Dow was 27,667, rounded off. Today's close, 27,674.80. Just a few points inside the projection channel. So what does all this mean? Are we at a major top? Should we wave the flag, sell everything, get out of the market? I don't think it's time for that yet. But, and this is a big but, we could very well be at some kind of short to intermediate term top here, and I'm going to show you why I say that. Today, both the Dow and the S&P closed at new all-time highs. They were accompanied by, not only were they accompanied by negative breadth on the New York Stock Exchange, but here's what else happened. I don't know how many of you follow the McClellan Oscillator or the McClellan Summation Index, but they're wonderful tools to give us an idea of market momentum. Is the momentum behind this move to the upside? And so what I noticed today was that both the Dow and the S&P closed at new all-time highs at the same time as the McClellan ratio-adjusted oscillator. I don't use the let's say orthodox McClellan oscillator because it changes so much over time. If you use the ratio-adjusted oscillator, which accounts for the fact that more issues trade usually year after year, and certainly more are trading now than were trading 15 or 20 years ago. So you need a ratio to compare them. If you use a ratio-adjusted oscillator, you can compare any two periods in market history, going back 100 years if you want. So today, the Dow Jones Industrial Average and the S&P 500 closed at new all-time highs, and they were accompanied by a McClellan oscillator in negative territory, lower than -5, and they were also accompanied by a summation index. The summation index, if you're not acquainted with it, simply adds the oscillator day to day. If it's in the plus territory, the summation index will grow. If the oscillator is in minus territory, the summation index will go down. So today's summation index was smaller than 740. Those are the parameters. New all-time high, both the Dow and the S&P. McClellan oscillator ratio adjusted lower than -5, in other words, more than -5, and the summation index smaller than 740. How many times does that happen? I'm glad you asked. Let's take a look at this fabulous chart. This is a chart of the Dow Jones Industrial Average, and I'm going to show you over the last 10 or 12 years how many times this situation has occurred. New all-time high close, ratio adjusted McClellan oscillator lower than -5, McClellan summation index lower than -740. It happened today. When's the last time it happened before today? Well, these differ slightly, by the way, on the Dow and the S&P. But the last time it happened on the Dow, wow, look at this. Now, these arrows are exact, folks. October 3rd, 2018. That's the last time that this happened on the Dow Jones Industrial Average. Okay? Let's go back. When's the last time before that it happened? Oh, look at this. Well, it wasn't the exact high. It was one day before the January 26th closing high in the DJIA. Okay? Now, just to prove that nothing is exact and gives you incredible, great shorting opportunities, let's show you. We're going to show you all of them. We're not leaving any out. These two happened on November 2nd and November 8th of 17. What happened? Great decline? No. But it was the top for the next, almost for that full month. We never went higher than those two closes. So that was the time before the January top. About before that, August 7th, 2017. That top held for over a month. Not a great decline, but there was a decline. Let's go back. Let's continue to go back. When did it happen again before that? Back, 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 back. Not too many times. Whoop, whoop, whoop. Here we go. Isn't this exciting? Before that, December 5th, 2014. Now, that was not an important top in the market. But boy, would you like to have taken advantage of this decline? On a closing basis, from 17,959 on the Dow down to a close of 17,069, 900 points. That's like 4 or 5% on the Dow Jones Industrial Average in a couple of weeks. Look at this. Okay, when did it happen before that? Well, I'm glad you asked. Mind you, again, these arrows, I put them on the exact dates that this occurred. September 19th, 2014. Dow closed at 17,279 and change, and within, let's see, the date here was 9/19, and the low occurred on 10/16. A month later, closed at 16,117. Pretty impressive. Are you liking this? I'm loving this. This is amazing. This is technical analysis of the finest kind. These are the things that you can set up. One of these days, I'll take some time, if you have time, and show you how you set these things up on a spreadsheet to do the analysis for you. Okay, I'm not done yet by any means. Okay, before that, this is not a great one. November 25th of 2013. In fact, you even closed a couple of days a little bit higher, but you had yourself a nice decline, then a good high. You went into new highs after that, so this was not a great thing, but you didn't go anywhere after that coincident factor occurred that I mentioned to you. I gave you the 3 conditions. Okay, before that, again, not a great one here. This is April 9th of 2013. You went up actually for a couple of days after that, pulled back into April 18th, and then you started up again. Didn't go anywhere fast. You went up and down and up and down, but that was not any kind of impressive top that you had reached. Okay, now we're getting back almost as far back as we're going to go. This is 2012, 2011. Now, mind you, there are no arrows here because these conditions never occurred here. We never got a new all-time high accompanied with the McClellan Oscillator and Summation Index that I showed you. So we're going back now. Look, this is several years now we're going back. When's the last time it happened before that? Back. Whoa! Oh, this is a beauty. So this high right here, it did not occur here, was the October of 07 high. But mind you, this July of 07 high was almost the same as the October of 07 high. And that led to the greatest decline in the stock market since 1929 to 1932. This was the preliminary decline that set the final one up. But this, again, I'm giving you exact dates when these conditions occurred. July 19th of 07 is when this condition occurred. So on that day, the Dow closed at 14,000 almost exactly, with 14,000 and change, and it came down to a low of a close 12,845.78. So I'm not going to do the percentages, but that's like a 15% decline in less than a month. I think that's it. I think we could have gone back further, but I don't think we did. Oh, well, we should give you this one here. We should give you the ones that don't work out great along with the ones that do. But I think you saw that most of them were right at tops. This one, again, was at a short-term top on May 18th of 07, had a little decline from there, but then you came up higher, came down again, came up again, down again. So nothing too much happening here. So that's what we're looking at. And that's it for me. I'm through for the weekend giving you these updates. Gosh, I hope you've enjoyed them. I hope you've gained something from them, because we couldn't be more excited with this software and what it's doing to analyze the market. And we hope that you're in that same basket. Tell your friends, tell people to watch this channel. I'm not saying I'm a great market analyst. I don't think I'm bad, but and probably better than most. But it's the software that does all this. These incredible things that are happening in the market, these projections that are giving us. How many times do you see people on the remarks in my website, this is a market top, this is a market top, no, this is a market top, over the past month or two. And the cycles kept saying we're going higher. So let me wrap this up. I'm not going to be here. I won't be doing an update Friday. I will not be doing an update on Monday. As I said, I'll be away for a long weekend. I will be back Tuesday. I will be writing a report. Please, I encourage you to go online, stockmarketcycles.com. It probably won't be online till Sunday evening or early Monday morning sometime. There's going to be a great chart on there that shows you a pattern that I think could decide where this market is going to see its final high. That's it. Subscribe, bottom right, tell your friends, make remarks, give us a thumbs up. Have a great weekend. We won't talk to you before the end of the weekend, beginning of next week. Thanks a lot for watching.